All right, good morning, everybody. So we're on the other side of the NVDA earnings, and yeah, it seems like a dud. There was this big build out, and they had a lot to say, still going through all of it. We're still pulling forward their earnings. It looks like we're in 2028 levels now, and the market's just numb to it. You know, they can't produce fast enough. And so that's not helpful. We're done with them and we're looking ahead to the next thing. So now we've got core PCE on the 28th. That's the next big thing. And the SpaceX IPO on June 12th. Between now and then, we really don't have a lot. So we want to keep our eye on the Strait of Hormuz, this energy crisis, and the bonds. Now they've kind of calmed down a little bit, um, but they didn't go away. So keep looking in that direction. Japan down 0.75%, small caps at a half. The Dow and the S&P down around a quarter, and Hong Kong basically flat. We're gonna get a little jobs data today. It's a small number. This one just comes around every week. It's not expected to change that much. 9:45 we'll get flash US service PMI. It's a slow enough day that we could see a little bit out of that at 9:45, but only because this number is off a little bit. So, keep your eye on it on I guess that's the Philly Fed Manufacturing Survey. Keep your eye on that one at 8:30. The Those surveys don't usually do anything, you know. But I've always said we don't want to ignore any data. We know it's coming in at 8:30. Watch for it, see if we get any impact. The number is a little wide, so there's room for error. I just don't think the market's going to care or even look in that direction today. We got some auctions today. The 4 week, you could just use the IRX on that one. 10-year tips, that one is near and dear to my heart. So I will be watching that one closely. I know it doesn't have a high meter impact, but I don't care what this says. I'm watching that one. So be on alert. Watch the clock at 1. You got your 10-year auction. Don't sleep on that. The government is back to picking winners and losers. Now they are getting into the quantum space. What a sinkhole of money. We were just talking about quantum last week and again yesterday, and I was building out some positions on Rigetti. I think it was that one. I'll have to go back and look and see what we were looking at yesterday. All right, rate hikes are still dominant on the curve starting in December. No, starting in January. You can see here it's the highest bar. It's a level higher than where we are right now. And it holds through March in April, June, on out there, right? So that's what the market is pricing in towards the end of the year. We'll see if they begin to pull that forward and bring it into December or October. They're not doing that yet, but that's what you want to watch for. That will affect the market. We would see the market struggle to rise in a scenario like that. If, on the other hand, they begin to unwind these levels, because you can see they're not far apart, that would be a little bit of a booster seat to the S&P and kind of help us out to the upside. We got crude up again this morning, not by a lot, just a little bit of a shot based on some headlines, it looks like. But we're still inside yesterday. You know, we ain't going anywhere yet. And the VIX also a little bit green, but we're well under any risk levels, sitting at 1760. So we'd have to get back above that $20 level, or 1920 if you want to get more specific. The gamma flip point for the SPX 7314. There's a cog line at 7311. I think I'd rather use that. Yeah, I don't know if you guys have been keeping track of the total net supply of crude or energy out there, but the clock is ticking and we're running out. When it comes to storage of crude and other liquids, you don't want to run the tank empty, right? So if you have a tank with 100,000 gallons in it, you can count it as 100,000 gallons, but you can't use 100,000 gallons. You have to leave some in the bottom, otherwise you risk getting air in the system, right? Jacking off the pumps. Don't want to do that. So they've been trying to calculate how long we have until we run out of fuel globally. And the estimates were late June, early July, I believe. So we're going to start to see more and more of that as we get. Now they're saying July, August right here. Oil markets could enter a red zone in July, August as stocks are depleted and summer demand comes in firm. Yeah, I seen the 2 weeks thing too. And I don't know, maybe that was a bit hyperbolic or that was their worst case scenario is in 2 weeks. And they're not being specific about what area would run out of fuel, right? Because it's not like the whole world's going to run out at once, right? It's going to be select countries are going to run out first, and then it's going to spread like a contagion, and you know what I mean? So I have seen 2 weeks though. Yes. Yep. Rationing is going on. So it's a bit of a mess. And that's why things are going to come to a head soon enough, right? I mean, there is a threat that crude could spike up like that. There is, but um, there's also the other side of that coin, right? That there comes a solution to the problem. The it's not a quick fix though. Either way. The put wall moved again yesterday, not by very much, just a little bit of movement, but it's still holding that elevated level. It's not going back down to those 7,000 level. So we're still holding out above the volatility trigger, and we are far from the zero gamma level. We are firmly in positive gamma territory. We were talking about this yesterday, and I think it's just going to help, for the newer traders to understand why we're looking at that every day. So when we're above that zero gamma level, it just gives us an indication of how dealers are supposed to respond to price moves, right? Now, contrary to popular opinion, those dealers don't care about you. They don't care where the market goes. They're just trying to make a dollar, right? They're trying to make a dollar by filling your trade for you. That's all they want to do. Just help you get a trade. And of course, make a little money by helping you get a trade. But when they help you get a trade, they get to carry the other side of your trade, and that gives them risk. And they don't want risk. So dealers need to offset that risk, which they will do with hedging. And when we are above the zero gamma line, then their hedging behavior is different when we're up here versus if we was down there, right? So while we are up here and we're far away from this level, I want to make that clear. We're not near it. We're not hitting it. We're not crossing back and forth through it. We are firmly in positive territory. When we are in positive territory like this, if we attempt to break out and go higher, say break out of yesterday's high, they will sell into that strength. All they're trying to do is offset their risk, right? They're holding a really large position of stuff. So if we attempt a breakout to go higher, they'll sell into that. If we attempt to break out and go lower, they will buy into that. That is their behavior. And that's why in a typical bullish market, the candles are generally smaller. They're more uniform. They have a more stable size without large wicks, and you just get a nice clean move from day to day to day, right? Bullish markets are typically more organized than bear markets. When we get large outsized red bars and big wicks and violent reversals and a lot of volatility. So in positive gamma, we are in a low volatility environment. Volatility is not being referred to here like implied vol. If we look at VIX, I mean, it's under 18, right? It's 17 something. But what I mean by volatility is a lack of movement, which is really what volatility is movement. So, get into the nerd phase of volatility. We have a lack of movement when we have price being buffered by these dealers. So if we try to break out and run, they'll sell into that. We try to break down and fall, they'll buy into that. And it just slows price down, and it decreases the run that we could see on a day-to-day basis. It's why we hold into those ADR levels so well. And that's where we're at right now. We're still in a positive gamma environment. We're not at the call wall, which is all the way up here. And we're still sitting in the range that we've been in all week. Let's look at this volume, then I'll knock all these indicators out of the way. 150,000 in the overnight, so we still got plenty of volume. They are participating throughout the overnight. So this has been our week so far. We'll just kind of tighten that up a little bit. I think it really highlights what we're saying here. That's been the week. Range bound, not really getting much done. If you want to get anything else done on the week, you got to get out of that. Coincidentally, that's also the levels that we need to get through for today, right? There's yesterday's high, yesterday's low. So that is the box that we need to get out of. Inside of that box, we have our own Globex range to deal with. So we want to get anything done today, we've got to get out of this Globex. Break the Globex low. We can challenge the RTH low of yesterday. Break that. We got all of yesterday and all of the week. That's the weekly low right there. Get underneath that, and we can take out that 72.86. Drops us below the 20-day moving average, and that completes the pullback that we've been looking for. The thing is, with this pullback that we've been looking for, we might not get down to that 786. See, when we've got a market that's trending, everybody gets frustrated because it's already run so much they don't want to buy. They're waiting for a pullback. So people take profit, and what we want to see is that others are happy to take their place, right? You get new people coming in as others take their profit, and then we get another leg up, and then we get some profit taking again, right? It's common sense, right? This is trading 101. So with that in mind, there's the run up that we had. We've had some profit taking. Now, when we get that profit taking, we don't want to see too much profit taking, right? That starts to bring in doubt and worry and maybe gets us thinking that the run is done. So we don't want it to fall too far. And if it barely falls back at all, then it really shows that people aren't ready to take profit. Nobody really wants to get out yet because the run isn't done. And so we don't get much of a pullback before we just continue on with what we're doing. So we're finally getting this deeper pullback, but we still didn't get to a normalized pullback. And we're starting a scoop pattern. I love those scoop patterns. On a weekly, those are so much better, and it'd be nicer if it was a little deeper, say into that 7,300 level. I'd certainly take it if I could get it. But we are forming a scoop pattern on a daily, and that is enough. Weekly would be better, but we got it. So all we got to do is break out of this range that we're in right now and come back up to break highs and then move into all-time highs and continue this move to the upside. And these are the levels that we would aim for. I'm not saying we're going to do that, but right now that's what it's forming and that's what it's shaping up to do. We'll know that that's wrong if we fail to break out on the upside here and we travel back through that range that I just showed you and we break below the low of the week. That will say that the scoop pattern is broken and we're now headed to at least the 786, at least. Then we'll negotiate down there, see what kind of candles we get, what kind of price action, and we'll take it from there. But for the moment, 786 is off the table when it looks like we're going to break out the top side of this range that we've put in this week. The nice thing about that is we can just put this whole thing into perspective. There's our mid. $74.46. We need to get above that to be above the upper part of this range here. We want to close up there, right? We want to close above this line at the end of the week. That way we've got a better chance of coming up here to the previous highs and then getting out here. If we close underneath here, it will make it more difficult next week to get above that 74.50, and of course then it'll make it harder to get back to this 75.50 and then the breakout. Short weeks get short volume, low volume, and we can make some radical moves in low volume environments. So if we can close above that 74.50, we could come in Tuesday next week at 7,600. It can be one of those things, you know. I don't think we will, but I'm just saying. Short weeks can do some silly stuff. So keep your eye on that 74.50. That is the midpoint of this pullback. And as long as we're underneath it, then we're on the negative side of things. We want to get on the positive side of all of that. All right, there's our ADR. Close isn't really close enough. I would rather have hit that, honestly, but we didn't. So we've already dropped away from that zone. Did create a little bit of a liquidity gap. If we make a run back towards the high, watch out when we get to 57.5. We might find ourselves with the first touch rejection there. Otherwise, take out the Globex low, and we got our ADR half at 92 cog line, then the RTH low and the full ADR 73.50. There's nothing on the agenda today that should cause us to break out and run other than some headlines, right? Nothing on the economic calendar. Maybe 1 o'clock with the auction if we get some really bad auction, but everything looked good yesterday, right? You see the auction that came in, strong demand, everything was fine. So not really expecting that today would go sideways. So whatever's going to break us out and get us moving, some kind of headline, shock and awe, uh, something. We're going to need something. Today's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. We came down and tagged it, so we don't have an MDP, and so far we're holding above it. Now we are still dancing around that weekly floor pivot. We tried to get above it. We wasn't able to keep it. We are setting some higher highs along the way, and we're setting these higher lows, but we're still negotiating with that weekly pivot. So that's what we want to focus on. We have a wide channel today that implies that if we break out, it won't stick. Just keep in mind that, these channels won't make price do anything. And if we break out, we could run. This won't stop us from running. It's very likely that if we do break out, it won't stick and we come back in again. So there is also the SNRs. If we do attempt that breakout, we got R1 above our own Globex high, and S1. We would need to break out below the RTH of yesterday, but still we would be inside of yesterday because we got the full low down here. If we're trying to eyeball it, there's not a whole lot of difference between these two. We can see the red one is farther away, so that's the path of least resistance, but it's not by much, right? I like when there's a large discrepancy. Say there's your floor pivot and the green line would be this far away while the red line is that far away. That's a very obvious path of least resistance. This one, the green line is closer than the red line is to the purple line, but it's not a significant amount. So there's a slight edge to the upside. That's it. All right, so the cumulative net volume is working and kind of matching us in our move so far. It's not leading the way, but we don't have a significant divergence there yet. Guess we'll have to just keep our eye on that one. See if we make new highs in price and don't get new highs in the cumulative volume, or just got to keep our eye on it. We've run through last week's point of control enough now that there's really nothing left to it. No expectation that it's going to assist us or give us any trouble. We weren't able to make it through the shallow zone that we had focused on back here. Looks like we got hung up on this liquidity gap close. They get their gap closed sooner or later, right? So now we're headed back down, see if we can get back to 7,400, our own point of control on the week. We've got a really nice distribution this week. It's not a perfect classic D, but it's pretty darn close. It's close enough. So unless we get some insight on the profile this week, it's likely we could just end the week with this classic D, and then we're set up for next week. Otherwise, we got to think about how this is going to turn out, right? If we get a breakout to the upside, we're going to have a lowercase b. And if we break out to the downside, then we're going to have a capital P. That's going to be the profile that we'll be messing with for next week, right? When we look back. $10-day, 30-minute volume profile in TPO. We did tighten up the bottom really well. And our value area, I think, is about as good as it's going to get. Within this zone, that point of control doesn't mean anything. It's not support, it's not resistance, it's not helpful. We're just crossing back and forth through that level. It has no value or interest to us. But getting out of this value area and then coming back into that point of control would likely cause a response on that point of control. So get out of the box. To the upside, we've got this zone up here that we got to deal with. And to the downside, we would begin to expand the chart below that 73.50 area. All right, that key level that we marked out from last Friday, it's the point of control. It wasn't a VPOC anymore because we'd already been dancing on its grave. But I kept it on there as an area of interest because we hadn't resolved the liquidity that had been there. We've cut through it quite a bit this morning. We tagged that level yesterday. I still don't think we're done with it. I'm going to keep it on there in case we go back up today on the RTH, right? Once the bell rings and we're in the regular trading session. Plus, look at that volume that we've seen today on that level. So I don't think we're done with it. I'm going to keep it around. If we don't go back up there, I'll probably cut it off by tomorrow. Actually, either way, I'll probably cut it off by tomorrow. But for today, I'm leaving it on there. We don't have a new VPOC from yesterday because we've run through that level multiple times. And this morning's volume and TPO aren't really showing us anything of value to help us out, other than it's validating that level that we already had marked, 74.55. That's fine. We'll keep it. If we look at the projected range for the week, we haven't done anything, right? There's our Monday range. We are IX10 inside of Monday. Sure, we've wicked out below and we've wicked out above, but at the end of the day, we're still sitting inside the box. That's what we've got to get out of, GTFO. Now to the upside, 75.40, the weekly expected move top. And to the downside, 7,300, the weekly expected move bottom. Just round it, right? Easy numbers. All right, looking at what's down this morning. China, more China, gold miners, junior miners, airliners, software. So we probably are going to see chips up with software down. Bitcoin, well, chips are down too. So we got them both down. Chips aren't down as much, but they are down. I'd look for a change in that this morning, see which one comes out on top. Because if they both stay down, it probably won't be very much fun out there. Breath really doesn't have the impact that it used to have, anyways, not in this current environment, but with a lack of influence. If we don't get influenced by crude and VIX today, or if we don't see some changes in the treasuries and bonds, then somebody else is going to step up and start bullying markets. It could be breath. But with both of those down, it doesn't bode well for the broader market. And it's hard to imagine why are we still range bound within yesterday with both of these down, software and chips down, and we're still inside of yesterday's range. Kind of highlights what I've continued to say. Breath isn't in control right now. If it was, with the Mag 7 down and chips down and software down, we should be breaking out of yesterday's range to the downside and expanding nicely into that 786 on the daily. Porque away. Banks down also. They had a nice run yesterday. I don't know if you guys were watching Banks, but KRE took off like SpaceX rockets. Then it stalled into the afternoon and held the high into the close. Giving up a little bit of it this morning, but after the move it had, it's not a surprise it wants to give a little bit back. So Bitcoin, miners, airlines, software, chips, China, all down this morning. And looking at what's up, we've got quantum and energy. The Mag 7 down volume is up. That's not up. That's not positive at all. And that's about it. If we get cloud computing and communications joining them to the downside, that would be about as much as we could handle. And I'd be surprised if we were able to keep our level and not sell off. See, look at the ES. You look at this and think of chips down, software down, China down, and we're still sitting in the range? Yeah, breath isn't driving this boat, yeah? This is certainly helping out. That drop in the TNX. Keep your eye on the dollar. And we get that VIX rising up this morning like it wants to go somewhere. Yeah, I mentioned KRE held that move into the close. So it's pretty straightforward day, right? As usual, get out of the box if you want to get anything else done. The base case today is that we're going to own this box and we're not going to go anywhere, right? So if that base case is wrong, you've got the levels. A topside breakout of our own Globex, we just aim for the yellow. Don't even focus on that ADR half because we've come so close to it already. We want to breach that, go for the yellow. It's 75.11 cog line. Otherwise, to the downside, get past our own Globex low, ADR half, RTH low, full ADR. Level by level, we just run it on down, right? It's 74.11, 73.92. And then yesterday's low and the Globex low. The full low, if you want to call it that. Be careful, be safe, watch the clock. Don't forget we got that auction at 1. And I'll see y'all tomorrow.